So here we are, end of yet another week of trade. Good evening, everyone. We are on the 26th of April, Saturday, late afternoon, just 8 minutes past 4 o'clock. First 15-20 minutes, we are gonna closely take a look at the Nifty, Bank Nifty, rest of the sectors. I have the RRG graphs open. We'll take a look at RRG graphs, evaluate the relative strength of all these sectors, try and make sense of what has happened, and based on that, how one should position themselves. We'll discuss from a point of view of a short-term momentum trader, of course. And we'll also try and consider if I'm a long-term, medium to long-term investor, then how I should position myself. So starting off with the Nifty monthly chart, I'm going to take a look at one time frame at a time. I think it will give us more real estate, that is room on our charts to discuss. So this is the Nifty futures on the monthly time frame, bar chart with our usual EMAs, the Fibonacci on the top, momentum, short-term RSI, and the range indicator at the bottom. So we know that March was a bounce back month. April started off with a strong sell-off within the first week and a half, and the rest of it has gone by recovering, which has led to a higher high, a lower low, and it's essentially an outside bar. A higher high, a lower low makes the shape of it like a broadening formation, which makes it a little difficult to figure out that what the market really wants to do. Because a higher high is a sign of strength, a lower low is a sign of weakness, and within the same range, within the same bar, you've created both. So do I trust this breakdown that you had given, or should I trust the breakout that you have given us recently? My experience suggests, I can add a dash of common sense to that as well, is whenever you see an outside bar, keep an eye, very close eye, that where is the close? Where is the closing price? Because if it has made an outside bar, definitely it has made a lower low and a higher high. Which one came first and which one came second? Or should I say that where is the close in relation to the high and the low? For example, in this case, the close is very close, or the close is very near to the high. So it's the bullishness that I'm going to trust more rather than the bearishness. It's the higher high that I'm going to have more faith in rather than the lower low. Because after the lower low it made, it has bounced back. Nevertheless, it's a range expansion. It's a wide-ranged bar. We don't mind it from a bullish point of view. We should not mind it because if you remember, this is essentially a kind of a range. If you drop a kind of a zone, rectangular range joining most of the erstwhile fractal highs, surprisingly, you have the 3rd of June election result low over there, and the recent lows are also more or less hovering. So this is not a bad level. It holds on, it supports the long-term chart, the long-term fundamental bullishness of the market. It is supporting. So far, so good. From a bearish point of view, from that theory, is this the first leg, a bounce back, and will we get a second leg or not? It's very difficult to say right now. Of course, monthly low will play a very important role. As long as April low holds, expect choppiness, and the view is tilting a bit towards the upside. I would say 50-50 kind of a market looking at the monthly chart. April's low, very important. Our Fibonacci charts is telling us same thing, a very high ranged doji of a Heiken, which is also an HAGB in our parlance, which means it is consolidating the sell-off. Maybe things will turn around. I would say that if April's high is broken and if it sustains somewhere here, the probability of further upsides slowly increases. As long as it stays within the April range, it will be choppy and volatile. And by any chance, if April's low is broken next month and it stays below it, then that's not good news for the market at all. So I would say we are in a 50-50 kind of a situation from the monthly time frame. If you take a look at the weekly time frame, of course, things will have given us a sign of improvement. In fact, the momentum started to improve quite some time back, led by some bit of a volatility choppiness, and then another extension of move on the upside. Icons have improved. RSI, this is a short-term RSI, which is kind of okay, no problem. Not bad. This is a sign of bullishness. I'm going to just quickly double click this, and in terms of visibility, just make it into monthly so that it doesn't bother us the lower time frames. So there's signs of improvement. What you're looking at is a retracement. Sorry for that. You're looking at a retracement after this fall. So yeah, if you're into Fibonacci retracements and all those things, you can quickly drop something like this. Try not to use this low, because this low did not trade here for a significant span of time. It was just a one-off. So I would not give too much importance to this particular low. If I'm drawing any tools, if I'm drawing any line or retracement, if I'm drawing an anchored VWAP or anything like that, I'm not going to give too much importance to that low. So a quick retracement, and if I add the 38.2, I think it has taken out the 38.2, and on the visibility, I'll just keep it on the weekly time frame. So, and because we are looking for resistances, I'll rather color it blue, or color it red. It helps you to, at least it helps me to figure out that these levels, these lines are supposedly for the sake of resistance or support. So out of these three Fibonacci retracement level, it's very obvious and very clean that this one, which is close to that 25,600, 25,500, 600, kind of confluence is really, really good with the erstwhile fractal high. The fractal high is close to this fractal low. So this is a very important level. More or less, an improving chart has the potential to improve further. If we go to the daily chart, we'll get some more clarity. This week, the index had slipped quite a bit from its intra-week high. So important level, of course, will be weekly high first. And on the downside, if we go to the daily time frame, it will make more sense. Coming down to the daily time frame, you will see that there has been gap ups on the way up, right? This was the sharp revival. If you drop a 50% retracement of this move, it will more or less come close to this gap up, which is 23,200, 23,400, this zone. So my sense is, I'm looking at a higher high, I'm looking at a lower low, kind of a broadening formation. Last time when the market bounced back, it bounced back little bit, consolidated and picked up very fine momentum. Sold off, gap down, sharp revival. So a lot of choppiness, volatility. I like to use the word drama. A lot of price drama has happened. All of a sudden, our trend momentum indicators have got in sync. All of a sudden, a pretty sharp correction has, it was due, but it came with a 200-point cut in Friday's trade. And our Heiken Ash is telling the market wants to consolidate. So if it wants to correct the way it corrected last time, I would say let's give it some 50% retracement room, 23,200, 23,400 kind of area region. And then let's see whether the market has, sectoral strength coming in from the banking, finance, or IT, or maybe energy stocks, whether we get this move or not. If not, we are headed for some range-bound activity. If it reverses, if it picks up strength, then slowly, if you were a long-only guy and you were looking for long-only trades, you were missing out. You did not get opportunities for a very, very long time. Opportunities will start to kick. You will start to get some opportunities as long as I think 23,200, 23,400 on the downside holds. If at all it comes down there. If at all this guy comes down here, if at all this happens, and if it reverses, then long trades will start to pop up. The important thing is this particular move was heavily supported led by the banking, the private banking and the financials. They will be definitely stretched on the charts. We will take a look at it. So what we will do now is we will try and figure out from a short-term relative strengths point of view how the sectors are playing out. For example, let's do a quick short-term analysis. If we take a look at this recent bounce back and we count the number of days from 7th to the current, that was yesterday's, you're looking at 11 days, 11 bars. On the daily time frame is 11 days. So let's go to the RRG graph. I'm using the strike analytics here. I'm under the RRG rotational graph section. I'll select Nifty 500 as my benchmark. I will stick to the daily time frame and I'll increase the count from 5 days to 11 days. Is that okay? We have a leading quadrant, a weakening quadrant, a lagging quadrant, and an improving quadrant. And these sectors will give us their percentage change in the last 11 days. Is that all right? What we would like to see is which are the sectors which have led, which have gone up quite a bit, which are there in the leading quadrant and pointing out upwards, which are there in the improving quadrant and probably pointing out upwards, etc. So let's quickly take a look. This section where we have only the indices, there's a lot of names like mid-cap 50, 100, 200, 250. So it's a little crowded. I want to focus on the themes, on the sectors, right? So what I'm going to do is I'm going to take out few of these. I'll keep the mid-cap 100, mid-cap 50, I'll take it out. Media is I'm not a big fan of that, and small-cap 100, okay? Rest I can take it out because it will be a lot of same repetition, same thing over and over again. Okay, let there be 100, 200. Chaliye, let's take a look at this now. So if you take a look at it, private banks, Nifty Bank, consumer durables, mid-cap 100, small-cap 100, though it's right there, they're all in the leading quadrant, out of which the private banks and the Nifty Bank were doing really, really good, and it just started to slow down. If this drop of vertical height on the RRG graphs imply that the relative strength of, or the momentum of the relative strength is cooling off. That does not mean it will fall, but it's a sign of slowdown. If we take a look at the improving quadrant, now remember we are looking at from 11 days. It's a short-term view. We will increase it later. IT is improving, the manufacturing, auto, realty and MNC. MNC not that much, but to be honest, auto, IT, realty, out of which, of course, auto I think looks the best, which is improving in the improving quadrant over the last 11 days. So not a bad sector. We'll take a look at it. And then we'll take a look at weakening, those who are slowing down. So you can see the FMCG, how it led the market. It has moved up quite a bit recently. Then it's slowing down. Let's try and understand this move in perspective of the chart of the CNX FMCG. The FMCG index has been going up, if we consider this uptrend, for 33 bars. Out of which the RRG graph that we have drawn is of last 11 bars. So in these 11 bars, it has gone up quite a bit and it's just started to slow down. And that is getting reflected over here, starting to slow down, right? PSU banks are just picking up. That's the PSU bank. This is financial services, CPAC, oil and gas. This is an important sector. I don't know if you can see it. It's right down there. Metals, pharma, healthcare, these are all relative underperformers. Let's take a look at the sectoral charts and we'll, compare them with the RRG graph. So from a short-term point of view, we are very, very clear that the private banks have actually performed. IT, auto, realty is improving. FMCG, oil and gas, infrastructure kind of stocks are slowing down. And metal, pharma, all these names are underperforming relatively. from a relative strength point of view. Don't go by the percentage. If you go by the percentage, you will say, listen, metal is up 7.5%, and consumer durables are 5.8%. So metal has done well. Yes, in absolute 11-day percentage, but in terms of 11-day relative strength, metals have not done that great. That is what it means. We will take a look at the individual sectoral charts. This is from a short-term point of view. Keeping this in mind, what I'm going to do now is I'm going to increase it to the weekly time frame. We'll go back to the chart once. We'll take a look at the Nifty futures. We'll open the weekly chart. And if we see this fractal low, that's from where the meaningful bounce back, sell off, and the volatility, all this drama has started. And if we count, we will take a look at 3, 4, 5, 6, 7, 8. 8 weeks since this low is what we are going through this kind of a market situation. So why not on our RRG graphs, we change our time frame to weekly. And then we take a look at the market's relative strength, sectoral relative strength, from an 8-week perspective with the Nifty 500. Okay, I hope this is fine. I will just change the week to daily and back daily to weekly. Yes, I think this is fine. Now let's do a proper analysis. From an 8-week point of view, the same names that I can see are financial services, private banks. So they have been outperforming from a last 8-week point of view as well as last 11 days point of view. So this is your pocket of strength. Okay, if this is my pocket of strength, PSU Bank is more or less there. A 10% gain in the last 8 weeks and 12.5%, 12.7%. So clearly banks, private banks, PSU banks and financials have been a leader. Relative strength also, percentage gain also from an 8-week point of view, from more or less an 11-day point of view. With this in mind, we should be looking at a very strong chart. A sectoral chart should be very strong. Let's take a look at it. Bank Nifty. Weekly time frame. Very, very nice looking 1, 2, 3 kind of a move. The all-time high breakout has been taken care of. Yes, last week it has slipped quite a bit from its intra-week high. And what I personally like to call a throwback. When you get a breakout, it generally comes down for a throwback. If the throwback sustains, if the throwback does not extend much, we should get an extension on the upside. Or else we might get into a breakout failure. I think next week's price behavior will give us some clarity. In terms of trend, in terms of momentum, in terms of structure of the chart, it has given us a breakout. Heikin-Ashi is beautiful. No problem. The problem is the slip from its intra-week high, which we will take a look at the daily chart and we will understand it better. This slip. Will it more or less find support somewhere here and reverse? Or are we headed for a breakout failure? Breakout failure. We have to wait for price to confirm. What do we do? See, this is essentially your breakout level. This is essentially the throwback that is going to happen. Prices should not come in this area, territory. It should not. Ideally, it should hold on. Even if it comes down, even if it slips, markets can do anything. I would say, please do not slip below your previous high. This was much before high. This is more recent highs. Please don't slip below this. So give the Bank Nifty this much room to, decide upon the next leg. But if, let's understand this strategically, if these kind of sectors falls, cools off, starts to improve, your Heikin-Ashi starts to reverse, you take a look at the heavyweight names like an HDFC, ICICI, whatever, the top 5, top 10 stocks. And if you're looking for a long trade, this can be a good pocket. It has the leadership, it has, of course, the relative strength, it has the structure in itself. The only thing is, hopefully, we are not heading for a breakout failure. So do not rush into the pack. Wait for the sell-off to finish. That's the Bank Nifty. There's only one thing in the Bank Nifty and financials charts that bothers me a little bit. That is this essence of the breakout failure that we are staring at. Apart from that, structurally, it's pretty clean. CNX Finance. Now, before I go to CNX Finance, I'll break down the Bank Nifty with private banks. It looks exactly, it's like a mirror image. And the PSU Bank. PSU Bank, however, is not nowhere close to its respective all-time high. Private banks, Bank Nifty, CNX Finance, all-time high, slipping from an all-time high. Maybe it will find some support and bounce back, or else the breakout will fail. Please understand, just in case, if by the time it's next week, we see a breakout failure, that will be a flag off. That will be a sign of worry. So a lot depends on these sectors to sustain and not lead to a breakout failure, because rest of the sectors are mostly weak. PSU Bank is just improve its trend momentum. It too has slipped quite a bit from last week's high, and it's got some room, it's got some headroom, it's got some resistances, fractal highs to deal with. Logic is the same, approach is the same. As it cools off, as it slows down, it's better that you stay above this zone and don't come down here. If you come down here, then you again go back to a zone, then you're again looking for a choppy market. We don't have stability. So that's the best cream of the recent 8-week and 11 days performance point of view. That was the cream, that was the best sectors and the best charts. What's next? What are there next? There are commodities. Now this is an interesting one. This is the only sector which from an 8-week point of view is price performance wise negative, but it is in the leading quadrant. It means that when you take a look at last 8 weeks ROC, you are negative, but you are relatively performing. If you remember, I'm sure you remember well, we have discussed this multiple times. Metal was a sector, was an index which was in a range for quite some time. It gave a breakout. It failed miserably, and recently it has given us a bounce back. It fell quite hard yesterday with almost a 2% fall, and it has created a big engulfing kind of a situation. So from an 8-week point of view, it is actually negative, but it's leading because of the breakout that it had given us in the recent past. If we take a look at the monthly, it's not looking really good. It's on the monthly chart, we have back-to-back 2 HAGBs, which is a sign of slowdown consolidation. And any break below these lows, we might see a retest of this area. जो Nifty के साथ हो रहा है. Nifty has been retesting its respective highs of these. Metal probably, as of now, what I see on the monthly, weekly is range bound and choppy, and daily, of course, has given us a short-term correction yesterday. It's not a very positive sector, though it's in the leading quadrant. Trend has just turned positive. Momentum has been supportive. However, this is a wide-ranged HAGB, range almost touching 2 standard deviation. I would say this, going forward next week, if Friday's high is not taken out, then this index is very likely to stay down. Okay. Next, in that structure, in that quadrant, not structure, we have, this is an interesting chart, RRG graph, which is oil and gas. Interesting because it was in the improving quadrant 11 weeks back, and now it is slowly inching towards the leading quadrant. It means that the oil and gas names must be showing relative strength. Oil and gas, energy, there are many overlapping names. So I generally follow the CNX energy. And if we take a look at the weekly and the daily combination, looks okay, no problem. Significantly away from its all-time high, wherein Bank Nifty is right up there. It has also slipped from its weekly highs with Friday's correction. And it's okay. The same thing. I would suggest I would use the same statement which I use for metals, that Friday's high And as you can see, if I zoom in, you can see that multiple times same level has been tested 4-5 times. So as long as Friday's high is not taken out, if any stock sector continues to trade below Friday's high, then slowly the chances of a reversal correction increases. If the market has to show strength, further upside, it needs to scale above Friday's high as soon as possible. So energy, I think, will cool off, though within this entire pack, barring metals, I would say if the highs are taken out, if you get some long opportunities from these packs, it's not a bad idea if you get a long opportunity. Rest from the improving quadrant is your energy, as I was just looking at oil and gas energy. The public sector enterprises, the FMCG. FMCG is a little weird behaving, just fell vertically and picking up. We did take a look at the FMCG chart. FMCG chart is just going through a statutory correction, short-term correction. Momentum has been up for quite some time. Wait, I think this kind of charts will give you a deeper correction. Healthcare is losing strength, relative strength. It's going right to left. And I think pharma, healthcare has a lot of overlapping stocks. When you get a move like this, a reading like this, where it's losing horizontal space, it means it's losing relative strength. These are your short candidates, depending on what charts are telling us. So healthcare, pharma, if we take a look at pharma, RRG is telling us it's losing relative strength. If my price tells me that I'm slipping, I've got signs of weakness, then these are shorting candidates. Chaliye dekhte hain whether price tells us the same thing or not. And it's come back to its previous high and slipped quite a bit. Nothing much from the weekly point of view. Monthly charts will give you an outside bar also. And then when I take a look at daily, it's a big sell-off in yesterday's trade, probably the biggest sectoral loser with PSU Bank 2.24%. Okay, so it's fell quite hard. I have a bit of, diverging readings when I take a look at my momentum indicators. And so I can't take an action right now, but if it falls a little more, if my momentum and trend slows down and reverses, especially if I start to get negative icon, then yes, जो RRG graph बताने का कोशिश कर रहा है that this is losing relative strength, and if that loss of relative strength leads to loss of trend, momentum, and I get a sell setup, then yes, pharma पे sell हो सकता है. Do we have a setup right now? No. We have signs of relative strength weakness. We do not have signs of price weakness. ठीक है? Now, quickly, for the rest of the sectors, a lot of them are there in the lagging quadrant. Of course, the biggest one, and this is, you rarely get to see this kind of a movement on an RRG graph. IT, big underperformer. Realty, underperforming for quite some time, slowly picking up vertical distance. The vertical distance improvement means the momentum of the relative strength is trying to improve. Small cap 100 is there. Consumer durables is there. FMCG is behaving much better. Auto is there, but then you can see auto from an improving quadrant has slipped back again. This was looking good from an 11-day point of view. It's not looking so good from an 8-week point of view. So चलिए quickly auto, IT और realty देख लेते हैं. Starting with auto, the 8-week RRG graph is not good. Okay, what's happening from a monthly point of view? You have just given us a bounce back near the month's high. It's an HHGB. Momentum trend are down, which means very clearly if April's low is broken, you're gone, you're coming down. That's one. But April low काफी दूर है, right? Weekly should be a range bound kind of activity, just like most of the markets. Trend momentum improving, a bit of slip from the intra-week high, nothing exceptional. Daily, very similar looking. It has given us a correction yesterday. This is not a very negative chart. To be honest with you, this is not a very negative chart. What the RRG is telling us, it kind of doesn't sink in that well. However, price is the ultimate. Just like we discussed in pharma, that we would like to see some signs of weakness, pullback, and then sell off. If similar thing happens in auto, so be it. RRG is telling us it is weakening. Price, not so much so, but if it does in a matter of few days, this is your pocket of, relative weakness which you can look to short. IT and reality. I'll take IT last. Reality, same logic. Reality, if I take a look at the monthly, very good looking HAGB formation on the monthly. These kind of charts, by the way, if they break the monthly low, I'm first talking about from the point of view of the sink of trend momentum, they will fall, clearly. But on the weekly and the lower time frame, as I go to daily, they are trying to form a base, a double bottomish formation, etc., etc. But it's not going to be easy. Relative strength is not there. If you see a slip again and then a bounce back, then it can open up further downsides. So auto, reality, pharma, if the market fails to sustain, this is where you will look for shorts. Banking, financials, which led the move, if they sustain, you can look for long. So it seems like the market is getting well divided. There is another side of the story, that the ones which were strong, the banks and the bank nifty, the financials, these, if they come down, will these guys counterbalance? Will auto go up, healthcare go up, energy go up, IT go up and counterbalance? This is what we have seen in the last 2-3 trading sessions, especially till Thursday's trade. We had seen this. Banks down, IT up. But yesterday's trade, Friday's trade was all washed out on the downside. So we do not have that clarity. We need to be careful. This is not the market to pile up position. This is the market to wait and see whether buying comes back from the strong sectors, within the strong sectors, whether selling comes back from the weak sectors or not. Accordingly, we have to position ourselves. Last, it's the IT, because IT is the most important sector when it comes to weightage after the banks and financials. Not a good looking monthly chart at all. We've got a bounce back, all right, but not a good looking chart. Weekly charts also are on a high ranged reversal. In terms of trend, momentum, not good. Monthly, not good. Weekly, not good. Daily is just improving a little bit. We had drawn this range and it's right about there. To be very honest, it's very difficult to sound bullish, short-term bullish on IT. If you're a long-term investor, you're getting a sector which is 20-25% from its all-time highs, more than 25% from your all-time highs. One can look to accumulate. But from a short-term trading point of view, I would say IT, avoid. So I think we have pretty nicely positioned ourselves for the next week. We would, number one, like to see whether the Nifty's move we saw in Friday extends further down or not, and whether we go back within that range. If yes, the drama will continue. We've got a nice section of relative strength within the banks and financials. They are coming down. We would like to see whether they slow down and give us another leg on the upside or not. That's where we would like to go long. But we need to be careful because it can lead to a breakout failure. If the banks and financials leads to a breakout failure, then I think we should be very certain this market will not sustain, this market will come down. Very, very certain. If this turns out to be a breakout failure. Then there are the pocket of relative weakness. We have the pharma we saw, we have the reality we saw, we have the auto we saw, which if the market fails to sustain, that's your pocket of weakness where you can look to short. That's only for those traders who can short in the derivative segment. The long only traders, you might get some opportunities from the relatively strong sectors if the market sustains, or else what I sense at the beginning of April, I did take a call that April will have some bit of volatility. We have seen that. It's looking like it's going to stay. It's going to, kind of roll over in the month of May also. It's going to be choppy. It's going to be a little uncertain. Not only the markets, everywhere else, it is uncertain what's going to happen from where, and accordingly, we have to strategize and, trade accordingly. Right. So yeah, more or less, that's my view on the markets. Let's now move ahead. Take a look at the doubts and questions that you have for me today evening.